the RSI, or if you're fancy, the Relative Strength Index. The RSI is one of the most popular trading indicators out there.
Yeah, well, it wasn't popular until I made it popular.
If you even had the slightest clue about trading, you have heard about this indicator. Books, websites, videos, there's tons of information about this one specific indicator. Hell, even your Uncle Rob probably knows about it. But with that said, 99% of people are actually using this indicator completely wrong. For example, if I could guess correctly, you probably have used the RSI for finding overbought and oversold areas. The lower line being oversold and the upper line being overbought. Now, if you've actually used it like this, you probably quickly figured out that sure, it works sometimes, but half the time it doesn't work very well at all. But what if I told you this is the completely wrong way to use this indicator? And what if I also told you the default settings for the RSI that everybody uses are actually not the best settings? Well, I'm gonna show you how to actually use this indicator correctly, and I'll also go over the most optimal settings for it. Let's get straight into it. Okay, so as a little history lesson, the RSI indicator measures strength. After all, it's called the Relative Strength Index. This indicator is a momentum oscillator. It measures the speed and change over a set number of bars, and it oscillates between 0 and 100. So here's where most traders run into a problem. They plop the RSI on their chart and use it for mean reversion strategies. For example, overbought and oversold. So if the RSI went like this, the normal average trader would consider this oversold. So they would enter into a long position here. But just because something is quote unquote oversold, that doesn't mean it can't get more oversold. So there's an obvious flaw in this style of thinking, but it's not completely wrong. We just have to perfect it. So here's the RSI on a chart, and you can see if we were doing the original style of thinking, it gave us 5 signals, and if you look closely, 4 of those 5 signals were losing trades. Now, every indicator ever is going to provide false signals. That's just how the world works. I know, it's a sad world, but our goal is to limit those false signals so we don't get as many, so it provides more winning signals. A way I found to do this with the RSI is by making a couple tweaks to the settings specifically. But before we go over that, let me show you the site called Fintura. Fintura is a forex and crypto broker, but damn, it's a good one at that. First of all, they don't have KYC requirement, which is nice, so you can sign up literally if you're anywhere in the world. Even if you're on an island with a volleyball, you can use Fintura. They also have extremely low commissions and spreads, so you're not wasting money like you would with a normal broker. And to top it all off, they have a 100% deposit bonus. All you have to do is use the link in my description, and if it's your first time signing up, they will match whatever you first deposit. Yeah, I know, it's literally free money. Go create an account with them if you trade crypto or forex, and at the very least, get the deposit bonus and see if you like it. Okay, back to the video. To do this, go to the settings of the RSI. Now, the default settings are 70 and 30 for those overbought and oversold areas. I like to change these numbers to 80 and 20. Doing this will give us less signals, but these signals we do have are going to be stronger and less likely to be wrong. The next step I like to do is confirm these signals with multiple time frames. For example, here this chart on the hourly time frame gave us 2 signals. So we're also going to check the RSI on the daily time frame and see what the signals are on that. As you can see here, we have 0 signals. So we wouldn't enter any of these trades because we don't have any confirmation on the higher time frame. So now that we've created a process to raise the quality of these signals, how can we use this to spot some great trades? Okay, so here we're on a 1-minute time frame and it does a parabolic move upwards, and the RSI goes in the oversold area. A pretty good sign to enter a short. But then we do what we were talking about earlier and go to the next highest time frame, the 5-minute. Here, the RSI has not yet reached the oversold area, so we wait some more. We go back to the 1-minute time frame and the price does a little pullback and continues to head upwards. So good thing we waited on that short. Price then hits the oversold area again. We then check the 5-minute time frame, and this time the RSI is in the oversold area on the 5-minute as well. So that's good confirmation. For good measure, we check the 15-minute time frame as well, and it is also in the oversold area. So these are all good signs to enter a short. But just because the RSI is providing signals to enter a short on multiple time frames, it doesn't quite mean it's time to enter yet. We still need some more confirmation on this trade to raise our odds of entering in a good quality trade. A nice way to do this is to add some price action confirmation. Here the chart does a double bar break, meaning there are two candles here showing signs of hesitation, then price breaks the low of both these bars to the downside. Also, as a side note, I do not wait for the close of this candle. We already have the confirmation, we just need price to break the low of these two candles. Once it does, we enter immediately. As the cherry on top, when this break happens, the RSI returns back to normal. So now instead of being overbought, it returned to the middle zone, which is also a bearish indication. What I like to do is set my stop loss right above this bar. Now you can use your take profit in multiple ways. I personally like to do this. Go to your indicators tab and type in VWAP. The VWAP is now on your chart right here. So what I like to do is take partial profits, say 50% of my trade, when the price comes back to the midline of the RSI. So right here, I would have taken partial profits because the RSI returned to the midline. Then I would take the rest of my profits when price returns to the VWAP. But this isn't actually my favorite way to use it. The RSI actually wasn't made for finding overbought and oversold areas like how everyone uses it. It was actually made as a way to find strength, as the name suggests, relative strength index. So you can use the RSI for pullback. Now, when I started to use the RSI, I started to notice on very strong trends, the RSI would just live between 50 and 80. If the chart was strong, the RSI would live in the upper quadrant and just bounce from the midline to the upper line. Same thing with wheat charts. It would just live in the lower quadrant. Now, for the strategy to work, the chart needs to be trending. If the chart is moving sideways like this strategy will not work. We need the chart to be trending like this. While the price is going up, make sure it's living in this upper quadrant on the RSI. We then want price to come down to this midline on the RSI. Once it does, we can enter the trade expecting this to be a pullback and wait for price to bounce off this midline. And as you can see, it works absolutely beautifully. Same thing with shorting. You want to find a strong downtrend and you want the RSI to be living in the lower quadrant. Then wait for the RSI to hit the midline, enter the trade expecting this to be a pullback, and boom, you have a glorious short trade. Just like the other strategy though, you shouldn't use this strategy just by itself. What I found is if you incorporate some price action signals with this, it works phenomenal. Next, I'm going to show you some price action strategies you can use to pair with these RSI strategies. If you do both what I'm about to teach you in this video and combine it with these RSI strategies, your trading profits will skyrocket. Thanks for watching, and I'll see you guys next time.